Hey everyone, Coach Investor back with another video for you today. So a lot of you have been asking me to cover the trade desk. So in this video, we're going to do just that. We're going to talk broadly about what the trade desk does. We're going to look at their earnings report. They also announced a 10-to-1 stock split, which is certainly going to help a lot of retail investors maybe get more exposure to that, because before, when a stock is at $900 or $1,000, it really scares away a lot of people. I know you can buy fractional shares, but for people that do not want to buy fractional share, maybe this is a better way to invest in a company like the trade desk. Quick note, this does not change the valuation whatsoever. Right now they're valued at $25 billion or so. When there will be the stock split, they won't be valued at $2.5 billion. They will still be valued at $25 billion. Just the stock price will be 10 times cheaper. I'm also going to talk about their way to go around this Google third-party cookie issue, which they are doing already right now. We're going to talk about the impact of streaming services, live sports, because live sports, in my opinion, is one of the major reasons why a lot of people are not cord cutting right now. So all of this will be discussed in this video, but before I do so, I just want to thank everyone that has been subscribing lately, especially since last week. Very, very grateful for that. And if you haven't subscribed to this channel, maybe hit that subscribe button. And if you like these videos, leave it an early thumbs up, as it really helps me outgrow the channel and get my videos out there. I'd also like to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me find the latest growth stock and innovative company. And right now I have a discount for one of my favorite services, the Full Offers. Through the Motley Fool's Stock Advisor service, you get access to a ton of expert stock picks. Every month you'll get 2 picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have returned over 500%. If growing your money is something you'd like to do more this year, you can visit www.fool.com/couchinvestor or click on the link below for access to my special offer and decide if Stock Advisor is right for you. Now let's dive into this. Right, so charts first, real quick. So for those of you that didn't know, yes, back in December, the stock was very close to $1,000 at $970. Since then, it has gone down 50% or so till the lowest point a couple of days ago at $570. Right now, we sit at this little support line, I will call it, that dates back to the 1st and 2nd of September, where there it was a resistance point, then it went back down, and then it blasted through that to new back then all-time high. So if it can keep that support for the next couple of days, keep that stability, build a nice base here, we could use this as a future support line as well. Also, a full disclaimer, I do not hold any shares of the trade desk, nor do I plan to buy in the next coming weeks. Why? Is it because I'm bearish? No, I like the business, I like what they're doing. Just right now, I've got no extra cash to buy into a new position. I've been buying a couple of new positions and adding to my others in my portfolio right now, so I've got no cash left for a new complete position as of today. In the future, that might change, but I will let you know as soon as that changes. Alright, so what is the trade desk? What do they do? Why is it so special? So hopefully by now you notice this huge shift from linear TV to connected TV, cord cutting to streaming services. This is where the trade desk comes in, because before, usually you had commercials that were well paid for you, for me, for everyone that watches the TV. Everyone gets the same commercial, which really nowadays makes no sense. Why should a kid or an old person watch a commercial for toys, or a kid watch a commercial from Geico? Makes no sense. People use their budget on a wide range of audience and don't really get their high return on investment. This is where a company like the trade desk come in. By the way, the leader in DSP. DSP is the demand side platform. There's demand side, there's supply side, and DMP, the data management platform. Almost forgot that one. So basically you have obviously the demand side, the side for the people that have ad space, and then there is the one where people are looking to purchase those ad space or inventory. Now with connected TV, it becomes way easier to target specific person, specific audience, because well, you can know who to target. So let's say I'm a gamer, so I'm watching some things online or a blog or whatever. Somebody has an ad space that they sell. I've got an user ID on the internet. We're going to talk about that in a bit, because Google has been changing the game a bit with the cookies, but the trade desk has actually found a way around that and they're working on it as well. So basically before, With linear TV, I would get, doesn't matter, 0 gaming ads, for example. Now, I can get targeted by a specific company because, well, they use the trade desk gets information from my website, gets my user ID, obviously only information that is relevant, and I get targeted correctly. Now, why is it great? Why is this connected TV space great? Because first of all, with linear TV, it's really big budget companies that can only compete on those things like Geico or other insurance companies, maybe Apple, Ford, whatever. People with the big bucks get time on your TV. Nowadays, it's a bit more democratic, so you can bid on ad spaces. So really, a lot of people, more people can participate in that side of the economy. Second of all, if a company does not want to shift completely from linear to connected TV, they can maybe test something out through the trade desk, test an ad, see how the audience reacts. If it reacts positively, great, they take that ad and they put it in the linear TV for the broader audience. If they see it's negative, they might tweak it, test it again, and then go back to linear TV. Obviously, right now, the trade desk doesn't really care if they test it out with the trade desk and then go to linear TV because they're still going to use the trade desk in the future, and linear TV will completely disappear, in my opinion, in the next 10 years. All right, and now last thing before we go into the earnings part is live sports. I know a lot of us have talked about this and thought about this as well. Why isn't live sports getting bought by Amazon Prime, Netflix? I know Disney, Hulu, ESPN are already working with a couple of live sports companies. The NBA was on ESPN and Disney Plus if you subscribe to that. Amazon has a couple of games on their platform as well. I think they reached an agreement for a couple of games for the NFL. Correct me if I'm wrong. They have already exclusive rights for a couple of games for the English Premier League. So great on that. But let's say for the broader aspect, Netflix, for example, as well, why isn't live sports switching from linear to connected TV to streaming channels? Because, well, for advertisers, it would be great because people that watching sports, real sports, esports, doesn't matter. It's really a specific audience and an audience that is very, very engaged. Right now, this, in my opinion, is the only reason why linear TV still exists today is because they have that big budget to buy those live sports, those streaming rights, and stream it on their channels. Now, there is a big change coming because I do believe it's up for bidding, I think next season or next year, I'm not so sure. So we might see a huge change of a couple of maybe NBA, NFL, Premier League, whatever, switch from linear to streaming services such as Amazon Prime, etc., which will usually benefit advertisers because they then again can target a specific audience. Not everyone will get this lame Geico or, I don't know, Shaquille O'Neal's insurance company with the General or whatever on their Sunday NFL game. If you are interested in, I don't know, going on holiday, gaming, sports, whatever, you'll get targeted specifically for your needs. And maybe you might gain from that, maybe not. Who knows? But that's what the trade desk brings to the table, is this huge added value. Obviously, there are other companies that do the same, but the trade desk really is the leader in that field. Right now, let's quickly look at their earnings, and then let's talk a bit about the Google third-party cookie thing, and then how the trade desk actually goes around that. All right, so first up, we have revenues of $219.8 million, an increase of 37% year over year, net income of $22.6 million, then non-GAAP diluted earnings per share of $1.41, which is actually a 74% beat, so pretty nice on that front. Now I'll get to the unified ID or UID in a bit. So they guided for the second quarter revenue range between 259 million to 262 million, which is an 86 to 88% increase year over year, and adjusted EBITDA of at least 84 million. Obviously, that huge increase of revenue year over year is because, well, last year a lot of people, because of the pandemic, stopped spending money on advertisement. Right, so overall, pretty good numbers, right? Growth is there. Future growth is there as well. They didn't guide for the full year because, well, a lot of people don't guide for the full year a year after a pandemic, but I expect continued growth to happen. Now, let's talk about the unified ID because, well, third-party cookies, Google is changing the game a bit. So at first, people thought, oh, this will probably harm the likes of the trade desk because, well, they need those information to maybe target and better target and track those potential audience that advertisers want to target. Now, they talk about this right here. So the trade desk is building support for Unified ID 2.0, a new industry-wide approach to identity that preserves the value of relevant advertising, while putting user control and privacy at the forefront. The ID is an upgrade and alternative to third-party cookies, so a bit of a shove in the back to Google, like go away, monopoly, and the recent pledges of support and integration with UID 2.0 include all those guys here. A lot of people are fans of Fubo TV, so they are one of them as well. Now, why is this so important? Because, well, with advertising, it's super important to know who you're going to target. Obviously, Google, we all know, has the monopoly over the internet. It's not a secret anymore. So if this actually manages to work out pretty well, like they expect it to be, it's going to be a huge advantage for the trade desk, for everyone that doesn't want to work with Google, for example, and sees that the trade desk can actually have the same results, maybe even better, because, well, customers might like it more because, well, their privacy, data getting preserved, so great on that front. Obviously, at first, it might be a bit of a struggle, but over the long term, it will probably pay off. Alright, so to conclude, I can go on and on about everything that's going to happen in the future with streaming, also with gaming, because the trade desk might enter that space as well as we move into virtual worlds. Virtual worlds, there are also a lot of ad space. They might enter that field as well. Who knows, that might be a video for another time. Let me know down in the comments below what you think about the trade desk. What, do you like this company? Do you hold it? Let me know down in the comments below. So that will be it for this video. If you liked it, consider leaving a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And as always guys, take care, stay safe, and see you all in the next video. Bye bye.